Good afternoon and welcome to today's investor webinar with Domino's Pizza Poland. We're delighted to have with us today Nils Gornall, the CEO, and Edward Kacyrz, the CFO. I'm now going to hand over to Nils to start today's presentation.
Okay, welcome everybody and thanks for your time today. My name is Nils, I'm the CEO of DPP and with me today is our CFO Edward. Today we're presenting our full year 23 results, our H1 results, and share our plans for the remainder of this year and into 2025. So I believe we've got some new investors on today's call, so we'll just quickly run through today's presenters. So like I said, my name is Nils. Look, I'm a true Dominoid. I'm 30 years in the pizza business. I started working for Domino's when I was 14 years old. So it's all I've ever done. I know the business well. I was a franchisee in Australia. I owned 20 franchise stores in Australia. In 2020, I bought the master franchise for Croatia, and we opened up the Croatian market to Domino's. We opened up this first store in July 2020. And then about 2 years ago, just over 2 years ago, we sold the Croatian business to DPP, and I joined DPP as the CEO. So now DPP holds the master franchise for Domino's Pizza Poland and Domino's Pizza Croatia as well. So that's a bit of my brief history. Edward, so I'll pass it over to you.
Yeah, thank you. A couple of words about me. I have a different background to Nils. Never worked at the restaurant business, but went through different roles, financial, strategic, and business roles in FMCG industry. I was working on the production side, like Mars and Kimberly-Clark, on the retail side with Smeg and Levi's, and also developed other brands on other markets. So I believe that our mixture of competencies is of very good influence for the company.
Okay, so I've been with the company now for just over 2 years. You know, we really had to turn the business around, and you know, we believe now the foundations for growth have been set. We're building more sites, more outlets, and we're ready to take this company to the next level. So we've really changed the game with order count growth, 40% growth over the last 2 years. I mean, you know, the only way for us to make this business successful was to grow ourselves rich and to grow our volumes to make this business successful. So that's what we've been focusing on, is our growth. I think we've done an amazing job with growing this business, and as we'll present today, we've grown the business past our break-even point, and now it's, you know, really setting ourselves up for a positive future. Momentum continues to increase. Like-for-like sales last year was nearly 20% growth, and then H1 year-to-date June, we exceeded that over 22% like-for-like sales up on the year before. So really bringing in some big numbers. Up over 100% on our EBITDA over 2022. Edward will share a little bit more on that. Our network of stores are becoming stronger as we improving our store profitability. We've strengthened our franchise department, and we're in preparation for new franchisees to come on board. We're just setting up our new systems and just getting ready for expansion. On the back of our fundraise, we'll also share updates on us trying to deliver 200 stores by the end of 2026, and upgrading our network and a little bit on our organic growth as well. Financial statements for 2022. So we've already presented this, so we just thought today we'll skim over some of the financial results. If you do have any questions on that, please bring it up at the end. So group revenue, we're up 25% year on year. We brought in 44.6 million pounds into the business. Our group system sales is very, very similar. We only have 8 franchise stores out of our network, so it's nearly 1 for 1. And yeah, so that was up 25% on year. Our AWOC, so that's our average weekly unit, our average weekly order count. So that sort of breaks it down to how many orders per store per week. So really breaks it down so you can see how we're going. Last year was 19% up on the year before. We passed the 700 mark. And then this year is growing crazy. So our H1 AWOC has passed 800, and our Q2 actually surpassed 850. So orders are definitely increasing through the system, and we couldn't be happier. Group EBITDA 3.5 million for last year, up over 100%. Edward, like I said, Edward will share that on our next slide. So in general, a high volume mentality is definitely working. Unit economics are becoming healthier. Store volumes still have plenty of growth ahead as well. So we're rather excited about the future. Okay, Edward, if you want to go through our financials.
Sorry, I was muted. Of course, with pleasure. One comment, the data presented here are for 2023 results, so it's worth adding some comment on the development. Here we see that the system sales and revenue grow by 25%. I can say that for H1, this is a public information. Our like-for-like sales grew already 22.5, if I'm not mistaken, for Polish market. And the unit sales also was almost 20% up. So that proves that the business is growing healthy in the way that it's driven by the order count, by the volume, which is, of course, driven by the new and returning customers. And it's not artificially created by the inflated nominal prices. So we are very proud of that. And going deeper, we see that cost of the goods are growing slower than the top line. This is a consequence of decreasing the impact of the inflations on the prices, and it started around May. We started accumulating it into our P&L, and we are still in this position where those prices are much better than a year or 2 years ago. Material and energy at that time, it was just after the beginning of 23, was just after the kickoff of the war in the Ukraine. So the prices, energy prices went up in the whole Europe. We had some of the prices internally hedged by fixed and spot pricing within our network. So thanks to that, the growth of 33%, which is just 8% above the nominal system sales, is not a big deal. And comparing to the market drives of those prices, I think we secured ourselves very well. Concerning the payroll, which is the third important line to explain, you see 32% up versus a year ago, but there are two very material reasons for that. The first one is the minimal sales, that minimal wage that is regulated by the legislation in Poland, which grew 18.5% year on year. And the second element is the number of the order count that grew by almost 20%. So with the growing volume, automatically there needs to be someone producing the pizzas and delivering them to the consumers. So that's the impact. In result, we defended our EBITDA positions, I think, in a very good way. 3.5 is the post-IFRS EBITDA. Pre-IFRS EBITDA was on 0, which was expected by us and also by the market. Below EBITDA, there is just one point important to mention, which is change on the non-cash and non-recurring items. Here we had some adjustments concerning the IFRS, lease liabilities reported, and also some of the penalties paid for the stores that we didn't want to stay with. They were in malls and they had no chance to be converted to the profitable stores. So we decided to exit them earlier and prepare the network base for further expansion. Next slide, Nils. On the balance sheet, no big material changes. Important to mention is the trade receivables, which were connected with the VAT refund from the previous years. After the dispute with the tax authorities, we just got 1.8 million back. Concerning the liabilities, here there is a swap between current and long-term liabilities. Namely, it is connected with the loan from Malacan. At the moment of preparations of the financial statements, the loan was supposed to end up in December 24. Therefore, it had to be recognized in the short-term liabilities. However, it was prolonged till June 2025. This is post-balance sheet date item, which we right now recognize and was already recognized also at the stock exchange. And what is also important, we use a portion of the fund raised money to repay £4 million of the Malacan loan earlier, and it happened just after the fundraise. So we stayed with 2.8 and some interest to be paid off in the next 12 months.
Okay, thanks, Edward. Okay, so revenue. H1 has been really strong. H2's growth is exceptional, really. I mean, these two graphs here really show the story. This is 3 years growth. The top section here is our AWOC, so that's our average weekly order count. And then the bottom one is our average weekly unit sales. This is how much our stores are doing per week per site. So, you know, growth has been exceptional for a 3-year graph, pretty good. So AWOC is skyrocketing, and so is the unit economics. As you can imagine, we're bringing in more sales, and a lot of the cost in the pizza game is fixed cost. So last year we passed the 700 orders per store. Year to date June, we passed 800, and then Q2 2024 we passed 850, which is well above our break-even point. System sales, so our sales grew together with orders. So, you know, for me, that's a sign of a very healthy business, and typically not seen in today's environment as well. So we're very, very proud that we're growing with volume, nearly 1 for 1. So last year's system sales grew by 20% year on year. Year to date June, system sales up 20% year on year. And you can see the order count 17.4, so nearly 1 for 1 growth. Like for like sales are even stronger. Year to date, so the H1 results were 22.2% year on year, like for like system sales, and then order count growing at nearly 19%. So again, this year we're growing our sales with volume, and we're growing faster than last year. So some really good results there. I won't spend too much time on this slide, but just to reinforce that our growth has been consistent, and we've been growing with the volume. So this is just sort of breaking it down quarter by quarter for last year. And this is probably most important. This is the momentum continuing in 2024. So we can see here, this is H1 22.2% like for like. And like I mentioned, Q2, I mean, a crazy 26% like for like sales. So really banking some big numbers. Q2 for our system orders as well, 22.8% up on the year before. So, you know, our constant focus on operational excellence remains our number one focus. Keeping deliveries around 25 minutes, continuously bringing in new product development. This year we launched several new products and several new desserts as well, such as our Kit Kat calzone, sweet rolls with raspberry and chocolate. You know, we're really finding these new products with smart marketing is proving very successful. You know, we're attracting new customers into our business, and we're also increasing our basket size as people upsell themselves. I mean, most of our business is done online, and we all know that we shop with our eyes. So when you see amazing desserts covered with chocolate, people impulse buy, and our basket sizes is definitely increasing. This slide here really shows the turnaround story. So Edward, if you want to go through our store profitability in Poland.
Yeah, we constantly repeat that volume is the key to the success, because volume is driven by the new consumers, and the volume is also the base for the revenue, which later on transforms to the EBITDA. And this slide exactly presents that. So when we take almost 30 months into the analysis, you can see that 2022 was generally speaking, very bad, with just 1 month of the positive store EBITDA. In 2023, when all elements of our strategies were implemented and they were speeding up, we just see that the first quarter was rather bad, the second quarter was on break even, and second half of the year was very strong. And what is very optimistic for us, we see that the beginning of the year is already positive in 2024, and we expect the end of the year to be even stronger. Of course, this is just a change of the trend from the perspective of the last 30 months, but more and more we are sure that this trend is stabilizing, and we expect it to stay with us for a longer. So we are very happy that we are delivering green zone for us and for our investors as well.
Awesome, thank you, Edward. Yeah, you can see here it really is a turnaround story. I mean, this is the year before. Took us half a year to get things going, and now things seem to be on track. Okay, customer satisfaction also continues to improve. So our Net Promoter Score, this is big for us. So our new customers NPS score year on year up 19%, and then returning customers up 37%. So both new and existing customers ranking us a lot higher in what we do. So that is why sales are increasing and why our customer base is increasing. So our customer base is also growing, and what we're seeing is that they're ordering more often. So the more consistent that we become in serving a consistent product and delivering the pizza in a consistent time and ensuring that the pizza turns up to the door consistently hot, what we find, the more consistent we can be, the more trust we're going to have in our company, and customers would just come back more often. So we're trying to turn the customers from an occasional user to a regular user, and it's definitely going in that direction. Mobile app installations. This is something that I really focused on when I joined the company. We spent money on developing our app. We now market our app. And it's growing crazy. And we just know that when we get customers onto our mobile app, they really become more loyal customers. And once the app is working, it's fast, and then we're delivering on our promises, it's really hard to go to our competition when we're already in their phone. So this is a big focusing for us, and we'll continue that in the future. Okay, so Croatia, we ended up the year with 5 stores. Our growth was 44.2% year on year, and like-for-like growth was a standard 3.2%. So this year we'll focus a little bit more on this year here. 2024 is looking much better. So sales in Croatia have been really strong. So we had Pizza Hut open up 3 stores in December last year. So one of the beauties of being a public listed company, people can see our results, and straight away we had Pizza Hut open up in the market. So they came to the market late last year, and we seem to have fought them off. Q1 was still our existing stores like-for-like were up 8%, and Q2 about 5%. So we're growing at about 6%, and that's with Pizza Hut coming into the market. So we're pretty happy with those results. I think Pizza Hut opening has really pushed the team to raise the bar. Raise the bar again, and I think we've upped our game on the menu. We've lowered our delivery times again, and we've made it really, really hard for Pizza Hut and the competition to get any momentum happening in the market. So we're really happy with what's happened there. Our revenues will continue to increase as we open up store 6 and 7. So that should be opening in Q4. We have our first franchisee in Croatia building a store. We're madly trying to get these stores open this year. And yeah, hopefully we can deliver on that. Croatia is definitely an exciting market, and we continue to on our growth plan to open up as many stores as we can. Okay, business expansion. So this is on the back of our fundraiser. We presented our fundraiser in late March. We raised over 20 million pounds. And this is what we raised the money for. So, you know, we want to reach 200 stores in Poland and Croatia by the end of 2026. So it was an ambitious goal to get to 200 stores, you know, in roughly 2.5 years. So this is the update. So our AWOC, as you can see, what we presented today, you know, we're already at 850, and we're in the year of 2024. So hitting our 900, not going to be a problem. We probably need to upgrade this this goal of ours. Okay, number of stores. So we're going for 200 by the end of 2026. This year, we're going to be opening up 16 new stores. So I think we're well on track. We did start late in the year after the fundraise. So I think next year we'll be opening up even more stores than this year. The goal for next year is 25 to 30 stores. So I think we're on target here as well. And then our franchisee share, we want to hit 45% of our stores to be franchised by the end of 2026. So we'll have more information on that at a future date. But you know, we have made inroads. We're thrilled with our newest employee who heads up the franchisee department. You know, he comes to us with great experience, and he's just setting up the building blocks, you know, for new franchisees for the end of this year as well. So we'll have more news on that as we move forward. So the store openings. So like I mentioned, we've opened up one store that was in the first half of the year. We have 11 new sites in construction at the moment. They'll be opening up from the next month all the way to the end of the year. We have 4 stores that we're relocating to a better site. So they'll be done this year as well. So at the moment, we're building about 15 new stores across the country. Now that we're working with a lot of new developers, you know, we've also earmarked stores for next year as well. So we've committed 5 locations so far for next year. You know, and we have a long pipeline of stores ready for next year. So this year's stores are set and done, and now we're working on all the openings up for next year. You know, like I said, our goal is 25 to 30 stores next year. We have 2 stores in Croatia that we're opening up in Q4. We're also doing our store refurbishments. So we have 6 upgrades of our older stores booked in for H2. So these stores simply need a facelift, and we find sales and profits accelerate after the refurbishment. So all the refurbishments we've done to date, as soon as we reopen, we just find that we get a big jump in sales straight away, and then the profits just go straight with it. Acquisitions, you know, we're also still searching for acquisitions to speed up this growth. So we can find something that fits in with our portfolio, then we will bring that to you guys, and hopefully that can speed it up and get us to 200 stores to the end of 2026 quicker. Okay, we continue to make the company stronger and prepare for increased sales. So we installed flour silos in our Łódź commissary. So commissary is where we make all of our dough, which we sell to our stores and our franchisees. So we've reduced the cost of our flour, which is great. Our Łódź commissary also has increased the production capacity. So that is basically we can make more dough in less time. So that's something we're working on now, and that equipment will be installed by the end of this year. Optimization of processes. So we have an automated order placing from aggregators. So the pilot store has finally started. So this is bringing all of the orders from the aggregators instead of bringing it to the tablet and us having to manually data enter it into our system. It just flows straight through to our online ordering system and just brings down the labor cost per store in the whole country. So some really big labor savings that gets implemented. We've also changed our cash collection, and we also set up an automated employee contract warehouse. Once again, just new processes, new systems, and bringing down our cost. We reduced our debt by 60%. So on the back of Q1's fundraise, we paid back 60% of our only debt. So we repaid £4 million in April, and it leaves our only debt at £2.8 million as of today. So in summary, 2024 is really shaping up to be a great year for the company. So like-for-like sales, again, up over 20% year on year. Sales are growing with volume. Our customer base is growing at the same pace as our sales. You know, that is key to growth. Our growth trend continues, both our top line and our EBITDA. Our focus on product quality, service and brand image continues to drive our sales and customer growth. Our store economics continue to improve as our average weekly order counts surpass 850. Our new store rollout is on track, and we have a long pipeline of locations that we're working on for 2025. And then the last point there, we pay 60% of our debt, which really puts us in a really good position moving forward. Okay, so that's for our presentation today. I hope you all enjoy our update and ready for any questions.
Brilliant. Thank you very much, Nils. Thank you, Edward, for that presentation, and many congratulations on some very impressive growth numbers. Nils, if you want to just stop your screen share, everyone will be able to see everyone's face a bit more clearly. And I would now encourage you to, if you've got any questions, please type it into the box at the bottom of your screen. This is a good opportunity to put any issues you have to the management team here. So let's start with a couple of questions which have come in. First one here, can you talk about the plans for growing the franchise business in Poland?
Absolutely. So we've started off, like I mentioned, with hiring our new head of the department. So he's been in QSR and franchising, like myself, most of his life. So I think nearly 30 years in the business as well. So he comes highly qualified. He's just setting up all the stepping stones and all the infrastructure to start to onboard franchisees. So we have a number of franchisees from within that we're onboarding at the moment. You know, like I said, next time we speak, we'll be able to share exact numbers on how many franchisees we've brought in, but it's in process. Once we've gone through the internal franchisees, then we'll start looking to outside of our business and growing the franchise network through that way.
Brilliant, thank you. The second question is, what does it cost to open a new Domino's store in Poland?
You're looking at you know, around £180,000. So return on investment is becoming more and more attractive. I think, you know, well, it's obvious why the business here in Poland hasn't been franchised in the start, and it's because the stores didn't make money. So, you know, that was our first. We can't go out and franchise yet when I first arrived, because what are we going to sell? There is no return on investment. So that was the first thing: get the sales up, get the store profits into the business, and then we can open up new stores. Then we can start selling down our stores because they're a profitable business and they're a good return on investment. So, you know, that's the stage we're at the moment. To build a store in Poland is very affordable. You know, we're very good at what we do here. The cost is a good price, and now the profits is growing fast, and the return on investment is becoming a lot more attractive. And now we're in a position that we actually go to market and we can actually start selling our businesses rather than just selling pizzas.
We've had a couple of questions on this about EBITDA and EBITDA profitability at a store level. So I'm going to sort of aggregate them into one, and you may not be able to answer them, but I'll put them to you. If you get stores to 900 AWOC, what sort of EBITDA would you expect for a company-owned store and a franchise store?
Yeah, we haven't really put that in the marketplace. A little bit hard to answer that one specifically, I suppose. Yeah, we haven't talked about specific store units and our unit sort of economics. So probably best not to answer that one.
Perfect. Okay, thank you. What further initiatives Domino's best practices are yet to be introduced into the operations?
Okay, so, you know, generally the Australian brands and the American brands are leading the way with new technology, especially in the IT department. So there's lots to bring in. There is lots of benefits in the Australian and the USA business that we don't have here in Poland or Croatia. The big one to my mind is GPS. So we are still not tracking the driver from our store to the customer's house. You can imagine that increases the level of service for the consumer, and it also helps us in the store knowing when our drivers are coming back so that we can time it correctly to have the next delivery ready for them. As soon as they come, they can go back out the door, and it just keeps our pizzas even hotter. So that's probably the biggest piece of technology that we haven't introduced yet. There's quite a few in the pipeline. We're slowly doing it because there is a lot of new technology, and we just need to choose our priorities, and we're slowly working through things to bring into our market. So at the moment, we're doing the aggregators, automation ordering. So that's the project at the moment, and then we'll see what the next project is after that.
Okay, thank you. I think you touched on this during the presentation, but it's a good point, so I think it's worth going through again. Is the 900 AWOC target you have for 2026 likely to be achieved sooner? And if you look at the UK, Australia, or the US, what AWOC are those stores doing, and could you get to those levels?
Yeah, no problems. I haven't got the exact numbers for the rest of the world, so I won't repeat that on today. But there is plenty of stock listed companies, so I'm sure you can get in there and have a look at what volumes of other markets are. But I suppose what I can say here today is that we've still got over 30% growth just to catch the Croatian market. You can imagine that we've still got a couple more years left of double-digit growth.
But I would say just one comment that we are already ahead of our internal plan with regard to the AWOC. 900, we already achieved 900 1 month in Poland, which is an extraordinary result, and we are very happy out of it. But to make it on average for the whole year, probably we still need about a year to make it happen. We should be ahead of our plan by 2026 to deliver 900 on average for Poland. Whether it will happen, let's see. But we are on a good path now.
Yeah, agreed.
Thank you. How confident are you that you will not need to raise any further equity going forward?
Edward, do you want to take that one, or?
Yeah, of course. Operationally speaking, the company starts becoming profitable, so we can fund ourselves and save some money for the investments. This is one hand side. The second part is that we already start selling some stores. We hope that we will speed it up. For the next update, probably we will have more to share. If we sell the stores for, let's say, £300,000 plus for each store, then we can release some of the cash that is already within the organization. That's the second thing. The third thing, we of course think about leveraging the business with some commercial funding. When we become profitable, constantly profitable, then we might be a very nice target for the banks. We are working on some of the standardized products also for our franchisees to support them with the financing. So we believe at this stage that we should not require any further funds for the operations, with one asterisk or remark, depending on the acquisitions. If we came to the decision to go for big consolidation of the market, there is a different story, and we need to discuss it separately.
Okay, thank you. What proportion of customers come through your own app, and are these customers more profitable, or do they order more than the customers coming from other sources?
Yes, do you want me to take it over?
Yep, go for it. Yep. I know you
Yes, so the 2/3 of our business is delivery, and 90% of these orders is placed digitally. About 20% out of this is aggregators, which is the external platforms. The rest goes through our web page or the applications, which are very happy of. And we believe that we see it in the numbers that the profitability of our own customers purchasing via our apps is higher because they have a higher baskets. There is less intermediate cost that we need to incur to bring them to us. So our also goal and strategy is to transfer them as soon as possible to our own basket and to our own communications and connect with them directly.
Thank you, Edward. Has there been any impact from Domino's UK entry onto the share register?
Yes, there has been. Yep. I've had several meetings with Domino's Pizza Group shareholders that have heard the story and wanted to hear our story. So yes. Brilliant,
thank you. Just as a reminder, we've got time for a couple more questions. So if you do want to type a question, please add it into the box at the bottom of your screen. Got one here on the Croatia market. Is the Croatia market profitable for you?
Edward, CFO,
I will take it over. So it's a bit tricky questions. On the store level, all the stores are profitable, and we are happy of that because the stores do not have a long history and they are already profitable. On the business level, we are still not profitable on Croatia, but we treat this market as a startup, still in the startup mode. There are just 5 stores. We believe that for the whole business, having about 6 to 7 stores, the business becomes break even, and the market has a potential to do 25 to 30 stores. So definitely this is a market to invest in, and we still need to go through the specific break point.
Thank you. Got one more question here. Are there any more stores that you are planning on closing or shutting down, or have you now shut all the underperforming stores?
I think we're pretty close. We're pretty close. So there's 1 or 2 that we're working on, but nothing really to share today. We're pretty happy with our store portfolio. I think we are nearly done with our store closures, which is good.
If any, we are rather thinking about the relocations than the real closures, because
exactly right.
This long tail is already out of the table, and we just have the question marks which we need to handle somehow. So I would say it's a question mark about the relocations than the closure itself.
Yeah. So before I mentioned about the 4 relocations that we've got for Q3 and Q4, and they're all shopping centre stores. So these are when we had a store in the shopping centre and we had a store on the outside. It was really easy to close the shopping centre and just move on. When we didn't have a store on the outside, we have customers that we want to keep, we have staff that we want to protect, and we want the staff to move with us. So for those locations, it did take us some time to find the new site on the outside, and now we move it on the outside. We bring our staff with us, and we've timed it so we closed one and opened up the others. We're looking after our existing customers as well. So I think it's all going well, and yes, we are right at the end of our store optimization plan.
Thank you. I think we've got time for one last question, so let's just select this one that's come in, and apologies if we haven't been able to ask your question today. How many stores do you need in Croatia to make it profitable?
Like Edward said, 6 or 7. Yeah, we're right on the break even. So
brilliant. Okay, well that brings us to the end of today's webinar. Nils, do you want to say just a couple of lines just to sort of summarize before people exit?
I think I've said everything for today, but yeah, thank you very much for your time today. I really appreciate it. If you do need more information and you'd like to speak to Edward and myself personally, please let Alex know. We're more than happy to spend some time. And yeah, what else can I say? Just really happy with the start of the year. I really, I'm blown away with the growth that we've seen in Q2. We were optimistic that we would grow at last year's pace, but to be exceeding last year's growth of 20%, I think is remarkable. We're all very proud, and I think growth tick. Now we need to come and we need to prove ourselves with building the stores and then building the franchise. So we're well on the way.
And profitability.
Thanks everybody. Bye.
Thank you very much.